Welcome, everyone. Thank you for joining us. He probably needs no introduction, but Vijay, as most of you are probably aware, is the author of The Bullish Case for Bitcoin, which is the first Bitcoin book I actually read and helped orange pill me years ago. So thank you for that. Welcome.
You're welcome, man. I've told my friends and my family who are here, it always feels good to hear that someone's read my book, because the thing that an author really cares about is not the money. It's just that someone has actually read what they wrote. So I appreciate that. Thank you.
I've read somewhere that I think like 10% of the books purchased, about 10% end up getting read. But yours was so easily digestible because it was, maybe 100 pages-ish. And I still, to this day, our team can attest to that chart where you've compared gold to fiat to Bitcoin was so powerful for me, just understanding the properties of each. So I wanted to ask you a little bit in comparing, we probably have a lot of Bitcoiners in the crowd, maybe just general crypto enthusiasts. What specifically makes Bitcoin unique versus other crypto assets? But then specifically, how does it compare to fiat?
So one of the things that's really difficult for most people to understand is, why does Bitcoin have any value at all? It's not like a regular asset. It's not like stocks or bonds or real estate, which have cash flow. And you can value something that has cash flow. You do discounted cash flow analysis. You look at, say, the rent of a rental property, and then you assign some multiple to it, and you get a value that way. But money has no cash flow. Gold has no cash flow. Bitcoin has no cash flow. So it's, generally a confusing idea. Why does this have any value? And the reason Bitcoin has value is because it has these attributes that make it really suitable as money. And human societies have used money for thousands of years because it allows us to do something that we wouldn't otherwise be able to do, which is we can have division of labor, we can have specialization. Certain people are dentists, some are teachers, some are doctors, and we couldn't have that without money. Prior to money, societies were very primitive, and any trade that happened between people was on a very limited geographic scope. So what are the properties of good money? These have been known for a very long time. They've been known since at least Aristotle, who wrote about them. Divisibility. You want to be able to divide your money so you can do commerce at larger and smaller scales. Portability. You want to be able to transfer your wealth from one place to another. Fungibility. You want every unit of the money to be equivalent to every other unit. So, for example, gold is superior as money to diamonds because diamonds are irregular in shape and quality. So it's hard to do trade with them because you have to look at the diamond and say, is this a good one or a bad one? Whereas all gold is effectively the same. And the most important attribute that makes for good money is scarcity. Because if you don't have scarcity, you don't want to keep your savings in that money. If sand were money, we'd all go to the beach and we'd get our bucket and we'd be rich, but actually we'd be poor because the supply of money would inflate, and then we wouldn't have any savings anymore because everyone would have a lot of money. So historically, gold was chosen as money because it's very, very hard to produce gold. It takes a lot of effort to mine it, and the amount of gold that's produced is actually very small relative to the total supply. So along all of these attributes, Bitcoin excels. It's more scarce than gold. It's more portable than gold. It's certainly more divisible than gold. It's easy to verify than gold. So it has all these properties and more. And one of the properties that I think really differentiates Bitcoin from gold is the ability to transport value. So I like to tell this story about how when I was a kid, my mum got a brain tumor and she was quite ill for a while, and my dad wanted to move my sister and I back to India because that's where his family and his support network were. And my dad sold all of his assets, his houses and everything he had, and there was no easy way to transfer that value to India in the 1990s. There's no electronic banking system there. And so he sold all of his assets and he bought gold, and he put it in a bag, and he flew to India with a bag of gold. And I vividly remember the terror on my dad's face for that entire trip. He tied the bag to his leg so that if anyone tried to snatch the bag, his leg would go with it. And so when I first came across Bitcoin, it very quickly clicked. Hey, my dad could have taken all the value he wanted to India without any risk. You can cross borders with $10 million and no one needs to know. I can send value to on the other side of the world as easily as I can send an email. This is a fundamental comparative advantage of Bitcoin versus gold, and it's one of the reasons why Bitcoin is outcompeting gold, not just gold, but fiat currencies at the margin.
Yeah, totally agree. I almost feel as though in your book you also talk about we're in the store of value adoption curve, and then the next leg would be the medium of exchange adoption curve. And I do feel strongly, since we're in the store of value adoption curve, that Bitcoin is the digital gold. And you hear that a lot. It's kind of a marketing phrase, but the meaning is like you talked about the bag of gold, right? Now imagine if your dad had millions of dollars of gold. How's he gonna what is he gonna carry that in a pallet? Like that's not gonna work, right? Mm-hmm. And then also you talk about gold bars on the we talked about portability. On the verifiability side, you have gold bars where you could measure the outside and say, okay, this is real gold. But then you actually would have to cut into the gold bars and make sure to verify there's not a layer of steel in the middle. So gold, in my opinion, just is not built for the modern society right now. And I know you've talked a lot about this in your book, but then you also brought up Aristotle. And I feel that, going back, this has happened so many times throughout human history, where you go back to the Roman era, or when England had the world reserve currency. And over time, they all debase against whether it's gold or whatever they're pegging their dollar to. And eventually, they just debase it, and the scarcity goes away. And so Bitcoin solves all these problems. So I guess in that context, where do you think we are? Gold is mooning right now. Bitcoin's mooning. Fiat currencies, maybe the scare of the 10% inflation per year has subsided a little bit if we're to believe the CPI number. But even if it is true that inflation's 3% right now, and these hard assets are mooning, where do you think that puts us in terms of the current macroeconomic climate and what's ahead in both the short and long term?
So I think we are very early in the process of Bitcoin's monetization. Bitcoin, I like to describe it as a nascent store of value. So it's becoming a store of value. All monies go through an evolution. They start off as collectibles, and then they transition to becoming a store of value as people recognize, hey, other people value this, so I want to keep some of my savings in this thing, whether it's gold or shells, or humans have had all sorts of different things as money. So you go through this transition to becoming a store of value, and then afterwards, after it's widely valued and everyone has some savings in this thing, it transitions to becoming a medium of exchange. And eventually, after you have prices in terms of this thing, when everything is priced in terms of gold, then it becomes a unit of account. Then you start measuring profits and losses in terms of that thing, and that's the last stage of monetization. Bitcoin is really at that early stage of transitioning from being a collectible to becoming a deeply established store of value. And that process, I believe, could take decades. What that means is that everyone, for Bitcoin to be a deeply established store of value, everyone will have some savings in Bitcoin. And right now we're maybe at a few percent globally in terms of number of people who have any meaningful savings in Bitcoin. So we're very, very early in the adoption cycle. Now you mentioned, Nick, gold. The price of gold is going up. I think Bitcoin is an adoption story. It's the story of this is better money, and people around the world are slowly figuring that out, and they're adopting it. So you have an adoption curve. The price of gold going up is a different thing. I think the price of gold going up is nation states recognizing the breakdown in the Bretton Woods monetary order, which has existed since the mid-40s, post-World War II. And the Bretton Woods monetary order established the US as the global hegemon over the world monetary system, effectively. And what's happened, I think, in the last 4 or 5 years is that nation states are starting to say, hey, this is kind of not good for us, like that the US has this much power. If we don't want to live under US hegemony, then maybe we need to go back to what the system was before, which is gold. And for instance, Russia had a lot of US treasuries as reserves, and when they got into conflict with the US over the Ukraine, the US said, hey, we're freezing your reserves. And if you're a sovereign nation, that's a really scary thing. You have your reserves frozen like that. And another example of this is Venezuela. They had gold custodied with the Bank of England, and they said, hey, we want our gold back. And the Bank of England said no. So, one of the things that sovereign nations really care about is that they have control over their savings. That's one of the big powers of sovereign nations, is control over monetary policy. Of course, the other thing is control of the military. So I think what we're seeing now is a breakdown in this 70-year-old or 80-year-old monetary order, and nation states sort of reverting back to the prior monetary order, because that's all they know. They haven't really come around to a Bitcoin standard or that idea. They will eventually, but the story of gold is different to the story of Bitcoin, which is an adoption story.
And what do you think that means for the current cycle? If we're on the adoption cycle curve right now, and let's say if you believe in cycles, we have maybe another year ahead of us with bullish price action. Do you think with nation states and corporations coming in because of some of the things that you mentioned, that that's going to change the outlook in the near term?
So I feel like this. I feel like the cycles are not dead. I think what happens is the price slowly but steadily goes up. It eventually creates retail FOMO, because people think, hey, I could have got in, and then they start to FOMO in, and then the price starts going parabolic. I think that'll still happen, because I think human nature still exists, and there's the animal spirits that takes over in a bull market. That hasn't happened though, and this cycle feels elongated. It feels like it's stretched out, and we were discussing this before. There's been much more institutional participation in this cycle and much less retail participation. And as you mentioned, Nick, there's actually been sort of Bitcoin outflows from retail. And I view this as a healthy thing. What you're seeing is a rotation from people who have held Bitcoin for a very, very long time. There are, a number of whales out there who have a very large percentage of the total Bitcoin supply. And for them, 100,000 was a magic number. And that's fine. I actually think this is a good thing, because the process of monetization is the distribution of the monetary good in a population. That is everyone getting a chance to hold some Bitcoin. And that can't happen if 40 or 50 or 60% of the supply is held by, a few hundred people. So I view the fact that Bitcoin's kind of paused or, is doing this sideways grind for a while as a very healthy thing. We're seeing a rotation of the old timers to the new people who want to get some of their savings in Bitcoin.
It is interesting to see, just as institutions become enamored with Bitcoin and make it a part of their portfolio, or corporations, that at the same time you have the retail investors selling. But it does make sense, right? $100,000 is a psychological number, as you mentioned earlier, and eventually retail will come back in on FOMO, and then maybe that's where you get to some of these extremely high numbers in this cycle that you could see. But to your point, I think the cycles still exist. It could level out from there, and the number goes up and to the right over time if you believe in the properties such as we do. I want to get ideological with you for a second. There's a lot of people that say that Bitcoin actually, fiat currencies has created a situation in our society with a lot of short-term agendas where someone creates something quickly because they know that they have to spend the money quickly, whereas when you have hard money like Bitcoin, it seems that individuals take a longer-term perspective on a lot of their actions, whether it be economic or personal. And I just wonder what you think the implications of that for society are if we do go back to hard money such as Bitcoin.
Yeah, I think anyone who's been in the Bitcoin space for a while and who has, tried to advocate for Bitcoin to their friends and family and seen someone who has adopted Bitcoin has probably seen this transformation in someone they know. And I've seen this over and over again. I've been interested in Bitcoin for over 14 years, where someone gets into Bitcoin and their mindset changes, because now you're saving in something that's a very scarce asset, as opposed to saving in something which is constantly being debased. When something's constantly being debased, what do you want to do? You want to get rid of it as quickly as possible. You want to spend it or you want to speculate it. So you have like these speculative manias in things like GameStop, or you have consumerism, people just spending their money because they don't have a strong incentive to save. But what I've seen is when people get into Bitcoin, their mindset changes and they think, wow, this is scarce. People are figuring out that it's scarce and it's really growing in value. And then once that clicks, I think people change the mindset. I need to get as much of this as possible, as quickly as possible. And then they start thinking, well, I can defer buying this thing, or I don't need to go on the strip, or I don't need to fly business class, I can fly economy, and I'll put that extra money in Bitcoin. And so people have more of a savings mindset and a long-termist view of the future. I will defer pleasure in the present to get some benefit in the future. And that has all sorts of cultural implications as well. I think moral implications, it creates almost a more Calvinist society where people want to work harder, they want to save, and because they have an incentive to save. And so I think this is sort of a really big positive society-wide. One of the lesser appreciated benefits of Bitcoin. Everyone's focused on the price action and wow, maybe I can get rich. But eventually what I see is people change their mind and start thinking, I just want to save as much as I can as quickly as I can. And maybe I'll work a second job, or maybe I'll sell, the chairs in my house or something like that.
Yeah, that's a funny saying in the Bitcoin community about just selling your chairs, selling everything you have to get more Bitcoin. Yeah, and I feel that Bitcoin maxi has been a term that sometimes has a negative connotation towards Bitcoiners, but I couldn't agree more. As a Bitcoiner myself, I feel as you get ingrained in the community, you end up finding people that are morally aligned, and I feel are what the rest of society should be in a way. Long-term thinking, family-oriented, high moral value character. It's just...
Care about their health.
They care about their health. That's another great one. Stephen Lupka, he's going to love that I just mentioned his name. He went on this journey when he became a Bitcoiner. I saw it firsthand. He went on this journey, and now he does the carnivore diet. He's always outside walking in the sun in Florida. And you can just tell he's gone through this psychological shift. And I don't think it's controversial to say that he is an even better person than he was pre-adopting Bitcoin. I see it firsthand with my family. My wife thought I was crazy at first when I got into it, as I'm sure many of you have dealt with that. My sons, I have 3 sons. I discuss Bitcoin with them. That I always say it's real hard money. And even though they're young, I think that they're actually starting to understand those things. And my wife herself is now also a Bitcoiner. Even though she's not in the weeds, I can see this reverberating throughout our family. And I just hope for the rest of society to also be adopting hard money like that as well.
Yeah, absolutely. And I think we underappreciate how important money is. It's half of every transaction that we do in our lives, and it's the foundation for an economy. So shifting to a money that encourages savings and frugality versus a money which encourages speculation and consumerism, I think can have a very, very powerful effect, because it really is the foundation for our society.
Totally agree. And then I guess for this cycle, what would you like to see happen? Whether it's not necessarily price action, but maybe if you have a price action prediction. But where do you think we go here? Do we just continue over the next year of corporate adoption, nation-state adoption, and then retail comes in at the end, like we said? Or is there going to be another red herring that we're not thinking of that you could see?
Yeah, I do think retail seems to be coming in late here. And if you look at all the indicators in terms of retail interest, like searches on Google, and so on, there really doesn't seem to be much interest right now. So we're sitting near our all-time high without really much retail interest at all. So I do think retail interest will come in at the end, because people who are not, I don't want to say this insultingly, people who are not very financially sophisticated have a tendency to FOMO into things like, oh, everyone I know is talking about Bitcoin, maybe now's the time to buy, and it's usually the worst time to buy. One comment that I'll make about this cycle is all of these treasury companies, doing these financial engineering schemes to get Bitcoin. This all feels great, but I do think we should be very cautious about how this is going to end. And these companies have these premiums to their asset value. But there's nothing magical about this premium. The premium can go away, and I think if you are someone who is a student of economic history and monetary history, you'll want to look at that as a signal for maybe the bull market is ending. I don't think that's anytime soon. I think that's well into the future, maybe a year or 2 years in the future. But the thing that I would really be looking for is, for instance, MicroStrategy has a premium of 2 times the assets that it holds. If that premium goes down or becomes negative, that's a real warning sign that we're at the most speculative part of the cycle and maybe get a little bit cautious.
Yeah, and David Bailey, who's famously launched the Nakamoto corporate treasury strategy, has said in a bear market, if he goes under NAV, he would potentially sell Bitcoin. Now imagine if you have strategy doing that, or Metaplanet, or name your nation state. I mean, this deleveraging of Bitcoin, that's risky. And I think one of the properties that we discussed, I think briefly, was the fact that Bitcoin is a bearer asset. And so individuals should stop trying to generate, in my opinion, let me know if you agree, but I feel that people should stop looking to try and generate yield all the time on their Bitcoin. Stop playing games with Bitcoin, because history has shown that they will Bitcoin itself will punish you for doing that. And so I just feel if you're trying to have exposure to Bitcoin, instead of buying a public company who is holding it, not to say you shouldn't do that even as a part of your portfolio, but use Bitcoin as it's intended. It's a bearer asset. Self-custody it. Use multi-sig technology, whether it's with BitGo's wallets or another wallet that you feel comfortable with. Or if you have a decent amount and you want to create a trust and custody it. But I just, in my opinion, you need to hold the actual asset and not a derivative of it.
Yeah, I completely agree. And every cycle you have a new cohort of people coming in who don't know anything about the space, who don't know how scammy it can be, and they have to learn the same lessons. And unfortunately, last cycle, a lot of people learned some very, very painful lessons. They were searching for yield on their Bitcoin because, as I said, one of the things is Bitcoin doesn't generate cash flow. But, wow, you could lend it to this company, and this company is promising 4 or 5%. That sounds great. But then what happens is the company goes bankrupt, and you lose a big part of your Bitcoin. And I think last cycle, a lot of people learned a very, very painful lesson, and they won't forget it, and they will realize that the biggest win is just to do the simplest thing, which is to buy, put in cold storage, and hold and forget about it. The people who have been able to do that over the long term have outperformed 99.999% of all people, including all the incredibly smart people who day trade and do these schemes to like lend and trade options and all of that stuff. So the simplest thing is the only thing that's going to really work for most people.
And the great thing is this isn't just for retail investors. Corporations can do the same thing. All we're saying is if you are a two-legged individual, just continue to hold the asset yourself. Vijay, really, really appreciate you joining us. It's a pleasure. You and I go way back in our work in the industry here, and thank you so much. And it was a pleasure sitting down with you.
Thanks, guys.